Well, good afternoon, good evening, good morning, wherever you are in the world, and welcome to today's Chartered Banker Institute and ActiveOps webinar. My name is John Henderson. I work in the ActiveOps banking division. I'm a very proud fellow of the Chartered Banker Institute and author of Retail and Digital Banking. Underneath all of that, so there's 34 years of multinational bank experience working in global operations. And I was part of well, it wasn't the cause of it, but participated in the aftermath of the crisis of 2008 and various other events. And that probably explains some of my grey hair. But we're all joined today, probably a little bit bashed again, and perhaps a little bit bewildered as to what's been going on in the recent months of 2020. And we're looking at facing into what is being expressed as the new normal. And even yesterday, I was reading from the Barclays CEO that, 7,000 people that might have fitted in a centre previously, these may well just be things of the past. And as we try to make decisions and look to the future, it's essential that we have insights and data to help us make the right decisions and do the right things in the future. And in that regard, I'm delighted to be joined by fellow colleagues Stuart and Richard, who will introduce themselves just in a moment. But before I do, I'd just like to say that we're going to have this as a discussion to try and be as open with you and for you to be as open with us. So please feel free to ask questions. There's a live chat available. My job as moderator will be to try and get those questions to the right people and try and encourage you to participate so we can get the maximum out of this session today. So if you don't mind, I'm going to hand you over to Richard now to maybe make first introductions, and then we'll speak to Stuart. So Richard, over to you.
Thanks, John. As you say, welcome everyone. My name is Richard Jeffrey. I'm co-founder and chief executive of ActiveOps. And what that means is 20 years worth of operational activities in what's loosely described as the back office of operations around the world. So looking forward to a bit more conversation today.
Excellent, thanks. And Stuart, over to you.
Yes, hello, it's Stuart here. I've been working with ActiveOps for 4 years now, looking after our customers. But before that, when I had a proper job, it was actually in banking operations. So 17 years working for HSBC, and then 8 years running operations for Abu Dhabi Commercial Bank out in the Middle East. I actually just about remember doing my banking exams back in the early 90s. So it was quill pens and inkwells then. But I think, John, that's still a technological advancement over your stone tablet days.
Well, thank you very much. What a friendly bunch we are. Okay, well, with introductions over, I'll maybe just make a start. And Richard, maybe just to come to you first of all. Some people may be familiar with ActiveOps, others not. So could you maybe how ActiveOps is in a position to enlighten us how financial operations businesses around the world are adjusting to this intense and ever-changing environmental factors that have arisen because of the recent pandemic?
I think enlightenment's a bit of a dangerous word there, John. I'll leave it to others to decide whether there's any enlightenment involved. But ActiveOps' software is in use, is a central part of the control system for back offices all over the world. Since the numbers on that, our software is used probably around 300,000 desktops. We're involved in automation in the US healthcare on a massive scale. But I think the particular topic of today is the orchestration piece. So it's around our software is used as a consistent system for managing and balancing work capacity all over the world. I mean, sort of 80 sizable enterprises and many, many more customers than that. So what that does is give us a particular, unique insight, I think, into if you like, a dimension of work. It's not about mortgages or claims. It's actually about the quantity of work and the amount of capacity and the performance related to that in a totally consistent way. So we genuinely can look at the quantities of work that have been flowing through the Australian banking system for the last 15 years, as much as it has through the UK versus South Africa. And we can look at that in aggregate, or we can cut it in a number of different ways across different industries. So with our particular sort of flavor of that, and as I say, I'll leave it to others to decide whether there's any enlightenment in there, but it is a common currency, which because we've been in this game for so long, can offer up at an aggregate level.
Wow, so phenomenal scope and reach right across the globe. Fantastic.
Well, it's different, right? I mean, it's not. There's different metrics out there about different product sets, but for the purposes of this today, about the aggregate effect on business operations at a global scale, I think it's certainly an interesting perspective.
Cool, thank you. And just talking about some of those aggregated numbers, Stuart, if I might turn to you, if we were thinking about the overarching sort of operational key performance indicators, what insights and what are they telling you at the moment?
Yes, thanks, John. So I'm going to take you through a series of slides showing you what our data's telling. And as Richard mentioned, this is an aggregated view across our client base, and it covers our 3 key sectors of banking, insurance, and BPO operations. Now, just a reminder for those watching this, please ask questions as we go through, and John will prompt me to try and ask those. So hopefully you're seeing a slide in front of you, which is downtime. Now, downtime is our word for absence, and in particular sickness. That might be short or long-term sickness, and also certain types of statutory leave, such as paternity and maternity leave. Now, here we can see really it's a very static number of around 6 to 7%. There is usually some variance across different regions, primarily driven by the sort of employment and regulatory environment in the country. So, for example, in India, we tend to see this rate around 4%. In the UK, it's typically 7%. US is quite similar to the UK, and then it does go up to sort of 12% in some countries, depending on their employment laws. But for the purposes of this, it's being around 6 to 7%, and then suddenly along comes a pandemic, and we begin to see that sickness level rising up, peaks around 12% before falling back down to 9%, which is where we are at the moment. Now, in some clients, when we look down at that level of detail, we see that sickness rates have already fallen back to below where they were before the pandemic. So the fact of working from home has kept us all a bit healthier. In other clients, different geographies, there's a bit of a lag behind that. I suppose to me the surprise here was, whilst it's doubled from 6 to 12, it was only an extra 6% of sickness. So not a massive change in terms of the staff that are available to work in your back offices. The next metric we're looking at is time worked excluding sickness, and I'll just explain what that means here. So you can imagine you're paying for resource, you have your staff there, and they spend some of their time on holiday. So we take that off, and then they are then available to work. You're losing a bit from sickness, and then you have people, and I used to say it was people who are in your offices, and I can't say that anymore, but it's people actually ready to work. Now, for this figure, to remove the effect of the change in sickness, I've just added that back in. So here we can see that time work does vary a bit from across different weeks. That might be how you're flexing your resource to match the flow of work that you're anticipating. And then suddenly we get into the end of March, and we see very, very dramatic falls in the time that people are available to work. And that represents the difficulties that companies have had in making the transition to home working. So we've seen in some organizations things going very, very smoothly, but in others, because of their technology infrastructure or where they've been located, it's been very much harder to get people equipped to work at home. And really up to that week, which commenced in the 12th of April, there were 20% of your people who were unable to work. Now that's shown a big improvement in the week commencing the 19th of April, as largely those mechanical issues that you've been having are solved. But quite a massive drop in the resource available to work in your back offices. So, that sounds all really bad news, that firstly, you've got increased sickness around that 6%, and then suddenly, this big effect of people are unable to work. So how on earth have you been coping to get things done on time? Well, probably the most amazing phenomenon that we've seen is this fall in business volumes. So here we're not measuring the number of transactions, because transactions take very different amounts of time. So if I'm counting, say, check processing, which is a very, very fast thing, against a mortgage, which takes a long time to process, just adding them together as a single number doesn't really give me any insight when I'm thinking about operational capacity. So we translate all of those different types of work into the time it takes to do the work. And this is the metric that we're looking at here. So the work flowing into the back offices of organizations has gone down by really up to 30%. And that's quite an extraordinary change that we see. Volumes now appear to be recovering, but interestingly, at every point over the last month or so, that fall in work has been higher than the fall in the people to do the work. And that's enabled us, and I know this is an average across different sectors and across all of the processes within the sectors, but it's enabled organizations to still get things done on time for their clients.
Stuart, it's John. Can I maybe just ask a question at that stage? Because that's obviously very enlightening information when you see the work falling as substantially as it has, albeit returning now. But just wanted to ask you, I appreciate this is like aggregated data. Are there some processes which you've seen that have actually gone really, really high, and others that have gone really, really low? So to try and give some examples of sort of the processing work that has gone through the roof, and other ones which have completely disappeared.
Sure, I'm just going to flick on a couple of slides, and I'll go back to the ones I've missed to have a look at that. So when we look at process level, we've seen kind of the biggest falls in the things that you would expect. So things like onboarding activity, down around 39%. So people really aren't, it's not the time people are choosing to go and switch banks at the moment. Things that have been a bit more surprising, payments and trade volumes, they're very significantly down as well. Then we look at your sort of statutory and regulatory and control processes. So again, I suppose when you think about this, these are things that, yes, you just have to do, reconciliations, the KYC, this isn't the onboarding KYC, this would be your sort of ongoing requirement to review accounts and to monitor accounts and to investigate. So those kind of regulatory set of volumes have been sustained. And then we have other areas where things like our debt management, we're beginning to see volumes really pick up in response to people asking for payment holidays and just unable to meet their commitments. But thanks for that question. And so, behind these numbers, there are individual stories, but still at an aggregated operational level, they really are showing the picture that, I guess when we think about business continuity and we were planning our business continuity, we'd always imagined that we'd be in situations where we'd be very resource constrained, where we'd have to make choices about protection of critical processes because there was not enough resource to go around. But in this crisis, we've not seen that happening. We've seen actually there has been less work to go around. And that brings me on to my next slide, which is around productivity. And productivity, this metric is around measuring how much someone does, how much someone produces. And this has been the subject of lots of academic interest and theory. And there seemed to have been in the past a bit of work done on what happens when you move people to a home working environment. And the academics kind of predict there would be an initial fall in productivity, and then it will gradually climb back to at least where you were before, and then some potential of upside. So you have the academic view against other considerations with people thinking about, well, when I was in the office, I had very fast, bandwidth fiber, so my computer was fast, and I have multiple screens, and I had a nice proper desk, and now I'm on a laptop, sat on the end of my bed. And what's that doing to productivity? Well, here we can see productivity, and we kind of baseline this so that January and February average is 100%, and in the worst weeks it fell around 10%. So that would kind of accord with the academic models. But we have to understand that really what's driving this fall in productivity is primarily that there's less work on average to do per person. So people simply don't have the work to keep them fully occupied, and therefore what they produce is less. And that's the dominant effect of this. If we drill down in detail and look at different departments where work volumes have been sustained, and that maybe is an important sort of control element where we're thinking about the effects of home working, then we do see departments whose productivity is as it was, working in office unchanged or slightly increased following the move to home working. But in fairness, we also see other departments where they have had a fall in productivity, 5 or 6% or so, and that might suggest there are particular aspects of the work they do where you need to have multiple monitors and screens, and performance is important. And the ability to do that in a home working environment is quite variable. So, John, that's a quick run through the data that we have at an aggregated level. Then just breaking that down at sector level, you can see banking is very much in line with those averages that I've just showed. So 10% fall in productivity, around 11% fall in time worked, and working around 19% down. Interestingly, in the sectors, the one that seems to have been kind of most robust or least affected to this is business process outsourcing.
Stuart, thank you so much. I would imagine this must stimulate some thoughts and contributions out there in our wider community. So please ask questions, challenge us, support us, however it might be. We'd love to hear from you because it's fascinating insight, and it is aggregated, as you say. Interesting comparison there against the BPOs particularly. So please, if you have any questions you'd like to ask Stuart directly, then do so. If I turn maybe just to then thinking about all this data that we've actually had access to, and then we're now starting to think about how do organizations respond to what the data is telling us? Who effectively are the winners and arguably the losers, and what is it they do differently? Richard, would you be able to maybe elaborate a little bit further on that for us?
Sure. Winners and losers may be a little difficult, and I think in truth we don't yet know, right? Because this is very much an unfolding story. We're all in uncharted territories, and the information is coming out in terms of the data. The stories behind the data will take longer, I think, to evolve. But I do think what we see is, perhaps from our perspective, a really clear difference in terms of focus. So if I could, I don't know whether can you bring up the next slide there for me, because there's a picture I use to think about this. This is a kind of our take on, if you like, almost like a hierarchy of needs. And what's fascinating to me is where organizations' focus is now 5-6 weeks in. So if you think about, at one level, there are still organizations who are just wrestling getting the mechanics of their operations safe and secure. So whether that is the laptops at places, it's the access to technology, it's wrestling with the VPNs to get those accessible. It really is not survival. It's the basic hygiene level of requirements, which are still proving challenging to some organizations. At the other end of the spectrum, what I would also see is right at the top there, organizations who have effectively barely missed a beat, and are absolutely on the basis of what their future operating model is, how they can reconfigure their organization, how can they, if you like, strategically respond to drive their best business purpose. And that kind of level of needs there, John, is quite stark. I mean, so just talking that through, we've focused a lot on, if you like, just the enablement, getting the mechanics of doing our operations, enabling our operations to work at all. But the next level of challenge is, okay, we know people are out there now doing stuff, but what's going on? And I think this is one of those areas where the reality behind one of those phrases you hear a lot around data-driven decision-making really came home to roost. Some organizations are at a very different level of capability in this area. So those operations which, if you like, their control, their visibility did actually still rely a lot on experienced supervisors, experienced operations managers who'd done the work before, they knew where it was, but fundamentally it relied on them being present in the process to manage the work. That was a real problem, because you've got to find a whole new way of communicating, extending information, and so on. So knowing what's happening was a critical determinant of how quickly organizations progressed. And there are still those that are building spreadsheets. There are still those that are having daily phone calls, because that's the only way they can progress from the views that they may have had in the past. I think you then have organizations which then the agenda changes towards and effectively they've got the engine turning over, but they can see a whole panoply of operational risk, which we're all knowing how in the regulated environments we operate in, how significant that is, whether it's exposure to all the well-established risks around compliance, sanction processing, et cetera, which is such a feature of our regulatory regimes now. But now we just open Pandora's box of new risks, because people are doing stuff in new ways they wouldn't have done before. So then there's the next level of concern around, or issues that companies are managing around, what is that exposure? How do they demonstrate to their regulators? We've right at that level, we've seen the really gold practice, where some of the information organizations have is enabled them to, if you like, support the regulators to actually come up with a more coherent view. So they're actually driving best practice. On the other hand, you've got ones which are really struggling to meet the needs of basic regulatory regimes. Going on up there, at the risk of, you then get into that, if this is to be the new normal, and we all, the hygiene level of making sure people had a safe working environment, that they have a chair and that kind of stuff that would have been dealt with early on. Now, I think there are some organizations which are really into if this is to be the new normal, where we have red team, blue teams working in the offices, our density is going to be lower, a higher proportion of people are going back at work. What is the challenge, but also what's the opportunity to enable people to thrive in that? Now, imagine that out there are some organizations who if you like, they've got the base point so well covered that is their focus. For others that are bottom still, they're just going to be struggling with the basics of getting work done. And I think, carrying on up that pyramid, you are then into all the lessons from the 2008 financial event was, there was as much opportunity as there was threat in there. So as some organizations are very actively learning from that experience and saying, how are we going to come out of this having had a very good crisis? And so that ability to optimize their performance, work within the constraints to get the best possible result is just one big opportunity in an environment where there's a lot of sort of new rules, there's no playbooks which have really yet been written. And that takes you to the top one, which is where organizations, the most progressive ones, are really thinking about fundamental changes to their business model, which they can leverage through this experience. So, John, I think that's a device to think through that, but we see a real spectrum. You can call it a capability maturity model in some circles, but it reflects fundamental differences in some organizations' ability to be able to be on top of, rather than reacting to, this particular circumstance.
Very good, and I think we could all recognise as bankers where our respective organisations probably sits within your Maslow hierarchy of needs there, Richard. And I think the other thing that springs to mind is, even on the back of things like the crisis of 2008, one thing that surely follows is revisions to regulation, revisions to your business continuity plans, and I guess there'll be lots of lessons learned on the back of the current pandemic that will help shape the way in which operations are managed across the financial services sector and into BPOs and other areas into the future, because we learn an awful lot post the event, and that's how we then gather ourselves up and then prepare for the future.
Well, sorry, just to interrupt there, John, but you picked on one thing there. Stuart's data he showed a moment ago was really interesting in terms of BPOs as a service industry, and I mean that probably formed a meaningful, it's a good sample. It might be 25% of the data in that group there. So it's at least relevant from the point of reliability of data. A lot of the things, the question marks that I've heard in the last 4 weeks have been the relative merits, if you like, of having third parties doing your outsourced work versus, for example, either having it on a more nearshore facility, or again, is it better to have it in your own control as a captive type of shared service arrangement? And those are quite legitimately a part of the questions that people have had. And in some cases, learning for the future is to repatriate work, have it closer to home, et cetera, et cetera. But actually you look at that data and you say, well, hang on a moment. Perhaps the other side of that equation is the benefit of focus. For a BPO, that is their business. They survive on the basis of being able to provide their customers with that service. And evidence would show that they've actually done very well at sustaining the work they're delivering for their customers as a class. So it has actually been, on the basis of that data, at least a sound bit on which you could divert your attention to the things that really matter. And I mean, it's not for me to judge, but again, data-backed decision-making gives us some really interesting insight.
Absolutely. Gentlemen, if you bear with me a second, I've got a question that's come in. I'm just going to read this out to you both. There's talk about offices closing and more people working from home. But if there is evidence of lower productivity, work from home, is that reduction in monetary terms less than the cost saved in closing offices and increased benefits in the long term? So putting some commercials around some of the impacts from the productivity data that maybe Stuart was alluding to a little bit earlier. How do we see that working through?
Yeah, so I'll pick that one up. So whilst we have seen that fall in productivity following the move to work from home, that fall is principally driven by the fact there is less work for people to do. So it's not the move to home working that has affected it. It's just that because business volumes are so down, people do not have enough to work at the rate they used to. Where we look at departments where volumes have not changed, we see many where productivity is where it was before. So there's been no particular impact of that transition, but there are others where it is true that it has come down. And that just may be down to those mechanical aspects of what you need to do the job properly. If you're doing reconciliations, you need multiple screens, you've got tons of systems running, and you can imagine the environment to do that successfully from home is probably not there. Trying to do that off a laptop is going to make you less productive. My bet is that we will see that productivity as work volumes rise, we'll see productivity rise to at least where it was before.
Very good. Richard, anything like that?
Well, all I would say there again is the data is fundamentally going to drive a lot of interesting discussions, or it can. The risk is, if you like, hypotheses don't get tested. There's enormous debate. Goodness knows our radio and our TV is just constantly filled with sort of debates around this. The crucial bit is having the information to be able to run scenarios, is the ability to see what things are working and adapt and adjust. So to put Stuart's point, that if you like, the actual manifestation of my productivity is keeping me busy, okay, that's been there since Romans built a playbook for how to build a road. So the issue for them becomes other facets of office work which do impact. I mean, speaking as ActiveOps, I mean, I know now our programming team, our programming development cells work perfectly well at home, and I'm not seeing any material reduction in the sprints and the so on process. But I am concerned that the natural energy one gets from having that group of people in the office scribbling on whiteboards and generating some energy about themselves, about what they're doing, will suffer. So there's more to this than just production, and I think the role of the office will continue to be an important part of the community of work. But I think, to center where I started, having access to information to guide us to make these decisions is critical, rather than just a random acts of darts in the dark, playing darts in the dark.
Very good. And listen, that was a great question. Thank you very much. And in fact, it's probably spurned a second one. So if you don't mind, I'll just take this one when it's arrived as well. Gentlemen, what are you hearing from customers about whether this will change how people will work in the long term, or whether people will just head back to the office?
It's a great question. So I think clients are beginning to think about this, and there are committees that are now actively looking at this. As Richard said, they're looking for data to support the decisions they make. There's still a high degree of uncertainty in most of the countries in which we work about what the coming months will hold in terms of government policy and restrictions, and I'm sure the practical realities of that will be a big element of what happens anyway. But if we are allowed to do some work from office, then the next question is, well, who goes to the office and who stays at home, and how do we manage that? And that's really where data becomes important to take the guesswork out of that decision making. So you have to really think through the functions that are working perfectly happily in their home environment versus those where, either because of risk or because of those factors around the job that make it better to all be together, you need to move back.
I think in the short term, it's absolutely going to be driven by the governmental context. So because we all have to, we start from those as the rules. So in terms of the feedback we can see from our customers is they are all just waiting for the guidance. So whether that's the density you can have on the buses bringing people to the office in Bangalore, whether it's just the physical travel, the enablement. I think it's becoming clearer, but I think the guidance at the moment is essentially just purely operational. We have to fit within the rules, the playbook. As the implications then flow, John, I think that will, as our collective knowledge of this expands, then better things will evolve. But at the moment, we're effectively in full lockdown, so you've got to just work within the parameters. I do think clearly organisations are keen to relieve the burden. Home working has been remarkably okay in terms of outcomes for customers, I believe, from the data. But what's also true is not everybody's home is configured to work at home. The whole schooling context, there's so many practical aspects that are driving it right now.
Yeah, and thank you both. And I think the operational leaders around the globe, no less in financial services, have done a phenomenal job of managing just to keep the machine ticking over. And clearly, this is a great opportunity, perhaps, for me to say that. I'm sure you would echo my sentiment that to actually have kept persevering and working through when really there was no book available for them to follow. They just had, the doors were closed, everyone was going home. They've done a phenomenal job to get us to where we are now. And new normal is yet to be determined. I think that's a kind of a panacea that we're all expecting at some point, but we're still iterating, learning, using the data, building our scenarios, and then taking all that good advice that you're talking about to then shape what new normal will ultimately be. But it does feel as though it is a pot of gold at the end of the proverbial rainbow at the moment that's still moving away a little bit for us. But yeah, great answer. Okay. Yeah.
I would say, I wrote a blog about this because I think at the time when there was a lot of fuss, a lot of things going on in the papers about people hoarding and queues for toilet rolls and other things that were just practical things on society. You realise how fragile society is. But if you just imagine for a second that instead of fighting over toilet rolls, people's credit cards hadn't worked, or the ATMs had stopped giving out cash. Yeah. And the work that went on behind the scenes by people to make sure that just was not going to happen, which the impact on society of that scenario. Some of us who work in that environment know how much dependency there is. The vast majority of the public have no concept really of that. And I think I wrote specifically to your point. I wrote a note on how much society owes those people that worked over that critical time to make things still work, and it's probably still going on, held together by pieces of string in places. So no, I completely agree. There is some, there's a lot of appreciation that society owes to some people that probably will never be known.
Very good. Okay, good. Okay, I've got other questions that have come in just now, so I'm just going to go back to Stuart. Maybe just ask Stuart another question, if that's all right. Stuart, in terms of practical recommendations, are there any tips or hints that you could provide to us that might help us either maintain or regain control in our operational environment?
Yeah, thanks, John. So I knew this question was coming along. It's given me a chance to really think about it. And just thinking back on my life in operations, what are the things I would want to have in place if I was leading operations teams now? And so this is my top 5 list of actions to take. So the first one is I've always had just a golden rule that I needed to know what work was in, what was done, and what's outstanding. And with those 3 things, you are in control of operations, and you need that as close to real time as you can get, and you need that across your enterprise. Ideally, as a leader, you just want to sit and look at one screen or one page which has those key metrics on across all of your operational areas of responsibility. And I'm guessing for many organizations, the way of getting that information just relied on people being together. So team leaders huddling together to give that regular view in buzz meetings during the day. And that kind of traditional way of gathering that information might well have been lost to the move to home working. So this is would go top of the priority list to fix. You need to get that view. Second on the list is a planning cycle. So, we've seen kind of 2 reactions to crisis. So you have people who are going, I am so busy trying to get the work out of the door that all of my planning is just pointless. I just want people focused on doing. And at the other end of the scale, we have people who say, I need to plan my way out of the situation. Now, I'm kind of firmly into that latter group. The way of responding to a crisis is to plan your way through it. So having that weekly plan, what are we going to achieve this week? And then be able to control against that plan, even in the uncertainty of I'm not sure what's happening to my business volumes because history isn't giving me an accurate forecast of what's going to happen. But even in that situation, it is worth sticking with the disciplines of planning so you can react to changes appropriately. I think that the people element is so vital. So again, this is one of the things which kind of, unless you had a formal operating rhythm, it kind of, you just was reliant on people huddled around together to know what was happening. So now everyone's disparate and in their home, on their own homes, that operating rhythm that connects team members with their teams. So we know we have that sense of purpose, we have that sense of achievement, we understand what the goals are, what we're working to, and why we're trying to do that together as a team. And then it connects teams to other teams, and increasingly, sharing across each other. That's really important to have in place. We've seen this big fall in work volumes. Now's the time to start preparing for that volume to come back in. So how are you going to cope as things, hopefully quickly get back to normal in the economy or head in that direction? How are you going to cope with the volumes that are coming through? And remember, some of your volumes there might have been some which is kind of perishable, isn't going to come back, and a lot that's just stored up there. And the next challenge is coping with this stampede. And then last on my list is around the data and using it to make your decisions. And I've been fascinating watching the UK government's daily briefings, not for the politicians, but for the scientists, and really seeing them try and make agonizing and decisions of enormous consequence. And the thing that's holding them back is data. So all they talk about is needing data to make good decisions. And that's really something we can learn. So as you're beginning to plan what's happening in your future operating model, don't do it on anecdote and stories, just do it on sound data. Oh, John, I think you might be on mute, I'm afraid.
My apologies. Thank you. I think I summed that up almost as 4 Ps that I gathered there from you, Stuart. All about people, all about having a purpose, that common purpose, and preparing. And the 4th one was just your sheer and utter passion for data. If you've got the passion for the data is going to help inform, that's going to help you plan and develop from there. So really good. People, purpose.
He does have a social life as well, John. It's okay.
Very good. All right. Excellent stuff. And I've had another question that's arrived. So if you don't mind, gentlemen, I'll just cut to that and just deal with this as it comes in. It's a very good one, actually. A couple of parts to it. In a scenario where some return to the office and others continue to work from home, but are responsible for the same work, how are groups adjusting their volume forecasting, knowing that there are things, as previously mentioned, such as bandwidth and equipment limitations that impact the time to take to complete a piece of work? Do we hold them to the same or different standards?
Oh, can I have a go at that one?
Very good question.
I mean, this is a very profound, interesting question, and in a sense, it goes back to my kind of maturity curve concept, because if we think about different levels of capability in planning, many organizations have quite robust but ultimately quite generalized planning systems. So we have standards, we have work times, we have ways that we model work across a year or a month or whatever as a generalization. But clearly, like all averages, we don't go on average, we don't go on holiday on average 1 hour a day. We take a number of days during the year. It's the same problem. So what you have got is the level of capability of your modeling system, your planning system starts to become critical here. Because clearly, as this question absolutely points to, we've got a whole new dimension of situation to plan with here. Now, in the context of specifically the ActiveOps one, what we would always be doing is against a set of standards. If John, you're running a training team, and Stuart, you're running an expert team doing the same work, the same standard doesn't apply, because John, you need to allow for your level of capability just as much as Stuart needs to allow for the same capability. And so the planning system, the way that you work out what you're going to get done, weekly, monthly, daily, whatever, has to reflect that. It's exactly the same here. So what this issue does now flag for any organization is I've got a different resource pools in different environments for doing their work. What's the consequence of that? I need to be able to plan for that. So the short answer is, what this is just is introduced is now perhaps another level of, if you like, situation. In our terms, you might configure different groups, configure relevant to ones that are working from home, because again, it's all about the feedback loop. That's fine. We find that we need 2 or 3 weeks of experience to effectively inform me about the level of allowance, if you like, the productivity I'd want to plan at, reflecting those 2 different things. And as long as my system allows me to do that, it only takes a moment or 2, like a week or so, before I'm pretty clear on the level of assumption I make. If my planning system doesn't allow me to make that kind of resolution, then clearly I have to go for the law of averages and hope my local team leaders have got the sort of, fly by the seat of the pants level of capability to make, to turn a generalization into something that's useful. It's a great question. It's a great illustration of the difference in the capability, and there's a great variation in levels of practice out there.
Yeah. Stuart, anything you'd like to add to comments made by Richard there?
No, I think Richard's spot on. I use an example often trying to explain this. If you have your Usain Bolts of your processing world, and you have your Stuart Hughes, and asking them to run 100 meters at the same speed is just pointless. So, Usain Bolt could start, make a cup of tea, read the paper, and still cross the line before I get there. So why are you asking them to go at the same speed? What's important is that you get the best out of Usain Bolt, and you get the best out of Stuart Hughes. they're going to be very different rates, but that's what your systems and approach should encourage. And you need to adjust that if they are working in a different environment, which is hampering their ability to do work. And remember, that's a big if, because that is not universally true across all of your processes. What the data is showing is there are whole departments and units that are perfectly capable of producing what they did before the change. But if you are in that environment, then you need to adjust in your planning at that kind of individual level.
Very good. Okay. I'm going to make one other last call for questions. They've been superb, so thank you for all those that have contributed thus far. Now I'm going to move on to sort of our last sort of plenary discussion here, but if you want to send me other questions, that would be fantastic. Okay, so this is an open one just to both of you, and it's to consider your outlook now on the longer term impact for operations as a result of the pandemic. So a little bit further out than maybe just the immediate situation. What's your views? Who'd like to start?
I'll tell you what I hope for. I'm not sure or convinced it's what will happen, but it's what I hope. You know, a life in banking operations, the only time you got into the boardroom was when something horrendous had happened, and you had to explain why that was. So, kind of the assumption that you're just forgotten, you're expected to do everything perfectly. And I hope this situation, as Richard and John have both alluded to, has reminded us all of the importance of banking operations, not just to banks and their shareholders, but to society as a whole. You know, society fails if the banking operations fail, even for a week. We can't pay for things as consumers. Supermarkets can't buy things to stock the shelves. Society fails. And I just hope that we are now recognised for the profession of banking operations that it is, and for just the astonishing work that we do day in and day out to keep the country running.
Very good.
Yeah, and I mean, again, I sort of echo that, Stuart, completely. It is interesting because I think over the past few years, particularly in our area, where the onus has been on elimination of work, robotics, process simplification, and I mean, all those things absolutely have to be on the agenda. In fact, you can see the consequence of this only amplifying the drive for digitization. But I think what it has crystallized is the realization of just the reality of being in control. The reality is more, and this is nothing to do with the COVID thing, but more production time is lost because people didn't have the right amount of work to do than ever comes through an inefficiently designed process, because the work will expand to fill the available time is one of those things. And I think maybe there's something about just there's the sort of variation on the old, I think it was Bill Clinton's presidential campaign around "Is the economy stupid?" as a focus point. In a sense, running it, just it's keeping the shop running is a really critical part of any organization capability. And there's a lot of focus on transformation and change, but the point is your capacity to transform and change is ultimately determined by how in control you are. And I think what this has done is shown that in sharp relief. So it will bring out some structural changes. A lot of very well-established principles, I think, lines have been crossed. So the opportunities are very large, but I think it does reinforce, to your point, Stuart, the importance of what people are doing out there in an environment that very often is, if you like, very much behind the scenes.
Excellent. Gentlemen, thank you very much for your comments. I have no other further questions coming through just now, so I'm probably just going to bring this session to a close. First of all, I'd like to thank, obviously, our panelists who've been with us today, Richard and Stuart, for their insight and discussion and answering the questions from our group. I'd also like to make a thank you to the Chartered Banker Institute, of course, for hosting us and letting us be with you and spend some time with you as our audience. And of course, that's my final thank you, is to you, indeed, the audience, for the questions asked, for your attention throughout, and for making good all the banking operations that we all rely upon day in, day out. So with that, I will say, stay safe. Thank you for your time. And here's to the new normal as and when it arrives. Thank you, everyone.